All right, so I think I'm sorry, I forgot about the introduction slides. So there was like a couple of slides I thought I will share with you guys before we get into the discussion. What is the whole concept of this network orchestration? And there's a bit of context from in the morning session run by Pari. And the whole thing is around is like, if you were to look at your new age competition, it's not just coming from your traditional competitors, but a bunch of startups as well. I think we all have to take that much more seriously. But before that, I think what we have seen is that we try to see what are some of the good and the great companies doing, and we took the S&P 500 index, and frankly, this was done by Harvard Business, and they actually categorized them into multiple boxes. And these are the four dominant themes that emerge. Number one, you are one of the four, which is either you're building an asset, or you're a technology creator, or you're a service provider, or you're a network orchestrator. And if you were to look at the S&P index, S&P 500 companies, and you were to sort them into each of those four buckets, guess where you'll land up in? You'll land up in 68% of them are asset builders, and that's exactly how they have created value, right? So now, why is that interesting? The interesting part is if you were to take a look at the unicorns, even though some of them no longer are unicorns like what we heard in the morning, but still they are pretty formidable competition for large organization. If you were to look at the unicorns, here's where the picture gets very, very interesting. Look at the unicorns on the bottom side. 51% of the unicorns are basically network orchestrator. So the value is clearly shifting from building fundamental assets to actually orchestrating the over data and other things. And this is exactly the context of why we have to take network orchestration a lot more seriously. When I speak about network orchestration, we are talking about business model like your Uber or Airbnb, and there are a bunch of other business models like a sharing economy, which is kind of emerging. And is the question fundamentally is around how important and critical is it for us to incorporate that into how we make money? How do we prepare for it? So this is the context in which I would like to kind of set the stage for the discussion. So on with the discussion parts. I really hate doing this up and down thing, but hopefully we are done with it. Sorry. So before that, a round of introduction, if you could probably give me a little bit of your background, that will probably help the audience kind of understand where you're coming from. I'd start with Geetha.
Sure. Thank you, everyone, for showing up. My name is Geetha Vallabhaneni, and I'm the CEO and founder of Luminix, Inc., and we make enterprise software. The product that's making us money that's in the market, it makes cloud available offline. So think of if you're a Salesforce customer or Oracle Sales Cloud customer or Dynamics customer, when the network goes away, the cloud disappears. So what you would do is use our technology, keep working it with the data. We built an offline engine, a rules engine, so you could run validation rules, business processes. You could build HTML apps to run on top of our app. So it becomes a mini cloud on a mobile device. So that's what we do. And we have customers across industries and Fortune 500 clients like Kraft Foods, Heineken, Baxter Healthcare, ING, Caterpillar, to name a few. That's what we do.
Thank you. Austin?
So I'm Austin Noronha. I head up Sony's Growth Ventures and Innovation team. The primary role of this group is to look at outside emerging technologies, disruptions in business models and emerging markets, and try to inject that into Sony. And we work across the board of Sony's interests, which some of you may know is ranging from semiconductors, image sensors that go into many of your mobile phones, to PlayStation, to digital cameras, to digital media, which is Sony Pictures and Sony Music. So the goal is to look at outside, see how we can match it up with inside. We work with startups ranging from seed stage startups to larger startups. And engagement models are either a partnership or potential investment, and at times acquisition. So externally looking, trying to inject innovation inside.
Thank you. Ramki?
Thank you, Bala. Ramki Krishna. I'm the general manager and global head of sales for Wipro's product engineering group. Some of you might be knowing Wipro is about a $7.8 billion company. We are a technology services company. We work across multiple industries. Specific to my group that I represent, product engineering, we help customers develop products This is, again, cutting across multiple industries, be it automotive, medical devices, compute, storage, companies like Microsoft who develop software products. We work across the board, and we have a fairly large team of about 12,000 people globally who are supporting this and helping our customers enhance the development.
Okay. Thank you very much. Thanks for that introduction. So coming to the whole concept of this network orchestration, and we saw how the new age and the old age companies, how they were really sitting on the far end of the spectrum. So the big question is this, when you guys are looking at traditional industry and large organization, do you see this as a disruptor here to stay, and do you take it seriously? What are your experiences? Geetha, you work with a lot of large organizations. You mentioned many of them as your customers. So when you are looking at it from that lens, do they look at it as a disruptor, main disruptor for their organization?
Right. So, first of all, to define that so that I am a little bit clear, right? Think about what network orchestration means in these industries. So I think of it as like three categories. One is take that enterprise cloud platform that evolved from Salesforce or Amazon. They built an asset that companies like ours can build on top of. So we essentially are a network orchestrator that's using an internet platform, right? An asset that I didn't build. That's one thing. And then if you move away from that model, there's the network orchestration of creating a shared economy, like Uber or Airbnb, or even Groupon and Snapdeal. I don't know where exactly they belong because they're actually giving a platform for people to sell their services. But what they are doing is to create an ecosystem where anybody can become an employee, not an employee, but a worker in this shared ecosystem. And they don't have to invent this whole network of how do I get customers and how do I manage my payment and everything, right? So they are sort of like a middleman for that. And then there's a network orchestration of consumer space. And what I mean by that, if you think about Facebook, Instagram, and Twitter, they have billions of people using these services. And if you're building a service that's tapping into that, from the get-go, you're tapping into a network orchestration, right? So if you think about that, and I think you then think about underlying services all of these infrastructure building companies are providing, whether they're going to stick or not, whether they're going to create a lot of disruption really boils down to the area they're working in and how relevant it is to today's society and time. All of that, I think, the same sort of factors apply. But having said that, taking a step back and say, and I'm sure we'll talk about it more, but creating sort of your mark on the end user or the consumer still is a challenge that all of these companies have to deal with.
Okay. So from that perspective, I would like to apply into your Sony context, particularly the diverse nature of your presence of Sony across industries. How do you see this playing out as a change in the business model within Sony's multiple technology products and industries?
So I think the way we see it is there are certain segments that Sony is not into. It's you take about Uber and stuff like that. But and I think more of the car companies should be bothered about it, or more of the cab companies should be bothered about that kind of stuff. But looking at just on the media side, you think about the media side is we are trying to make it as easy as possible for more and more people to create the content, and so the availability of the devices that we have. So that a freelancing, as I was talking about it before, is a freelancing artist could be creating some content and have a mechanism to monetize it. So in a way, we are making it, instead of every time someone needs to go create a high-end video, has to go to a certain studio and pay mega bucks for it, is now a freelancing agent can have the hardware, which used to be extremely expensive. We are bringing down the price of that and let that person contribute into the production of certain content. The same thing is happening with the big movie production. The pieces of it is just being siphoned out to smaller parties, a lot of freelancing people. To some extent, it is a distributed mechanism of workforce that is allowing more and more richer content to be done. That's on the content side of it.
Okay.
On the platform side of it is we have the PlayStation Network, which has millions and millions out there. We are making it into a platform where, once again, other people can create content and monetize on it.
Okay.
So we kind of, instead of making it into a closed system and just having very specific people developing big games, we are allowing a lot of indie games to be developed, and that's how we're kind of trying to open up the whole economy.
Got it. And then has it changed your business model, how you make money?
It has. Previously, as I said, just for the gaming side of it, it was always the big studios, the Electronic Arts and all that were creating. Now, small guys can create, run on the Sony platform, and be able to monetize.
Okay.
So the model of allowing more people to access the platform and to get money out of the platform is being enabled by Sony now, so that more and more people can create more content. And at the end of the day, the consumers benefits because they have more choice coming in there.
Right. Okay. Sounds good. So Ramki, you work with a lot of enterprise customers, and you actually help them through both the digital aspects as well as the product engineering side of it. What do you see? What trends are you seeing, particularly from this whole moving to the platform, getting external consumers and producers hooked up into your platform? Do you see it as a dominant trend, or is it just taking off, or are there, what do you see there?
There is. In fact, I'm going to probably give a Wipro's perspective here in terms of what I've seen. There are a couple of different angles in which it's happening, right? The first one being that our customers, the large corporations, the Fortune 500 companies, are getting disrupted. Mm-hmm. So they have to react to this. And in some cases, they have some specific problem that needs to be solved. And we are a bridge or a glue logic wherein we are working with the startups in bringing those solutions, and we are building the glue logic and providing that as a solution to our customers. So that's one part of the problem. Taking Uber as an example, which is disrupting the industry today, we are seeing the car manufacturers are adapting and reacting differently to that. Talking about product development again, traditionally, they used to build the monolithic modules, wherein everything is built in one silo. They essentially hand out the specification to the suppliers, and they build these monolithic systems. Now it is getting more modular. They are looking at what is available out there, and then they are building systems internally. So that's a fundamental change in which the car manufacturers are reacting to this. Mm-hmm. What it again means is that they are bringing in a lot more development in-house. They are keeping user experience in the center of whatever that they are building inside the vehicle. And then that fundamentally shifts the way that they are reacting to the market, the business models that they are thinking about. In fact, I was talking to another car manufacturer a few weeks before, and they are talking about car as a service, because there's a rental car, that business is going to go down for them because there's going to be only so much of assets that's going to be out there. And if Uber kind of companies are going to become prevalent, their assets are going to go down. So what's going to be the model in which they're going to have a sustained piece of revenue? So those are some of the things that they are thinking, and we are helping them solve those problems.
Okay. It's interesting you mentioned that you would expect that they would send a lot of work outside, given this, this whole network orchestration implies. But you're saying they're actually bringing that back inside. So could you draw some, color to that as to what part, why is that driving that behavior?
So a couple of things. One is that they want to own the experience, inside the vehicle, because that is what they believe that, the customers are going to associate a brand with, mm-hmm. right? So that's the piece that they are focusing on, in which they are bringing it inside. Beyond that, obviously, they want to look at modules that are out there available, ready-to-use modules, but they do not know how to integrate all that together. So that's where we as company come in, and then we build the glue logic and integrate it and ensure that it's validated and it is production ready.
Okay, got it. What does it mean for an organization which hasn't made money through network orchestration as a model to actually start making money in this new model while still running with their old model? Obviously, they can't just abandon that. How does these two coexist, or at least for some time, or maybe for a long time? I don't know. Have you guys seen challenges emerging out of that? Maybe Geetha, you've seen customers actually make those decisions while you're helping them. So if you could talk about your experience around that.
Right. So there is the piece of actually making money out of your business, right? If you are an enterprise software area, from the get-go, everybody knows you're going to pay for it. So whereas if you are a consumer app that got hooked people for free, and then monetizing from it then essentially becomes a harder problem to solve. I think from what I have seen, there are two angles to this, right? First of all, trying to figure out the business model. Like any other company, it's a problem each company needs to solve for themselves. But if you are offering something unique and a value-based offering, it's easier to charge for it, versus if you're an easily replaceable service, then you're having a tough time for it. But then the more interesting question you asked is the after effects of what if you can't make money, the decisions you make if you're a network orchestrator, right? I think that really boils down to the human angle to all of this. If you're a company and you're employing people directly, the decisions you make in terms of cost cutting and budgeting and all of that is different from if you're a network orchestrator, and if you haven't made money, the decisions you make can be a lot faster and probably a little bit more detached. And I actually personally was talking to another entrepreneur. They make enterprise software, and they were selling a lot to like video game developers and app developers. And in some cases, they were actually selling to these developers for free, or giving them a pay schedule of 60 days or 120 days. And if the company can't make money, then they're sort of like defaulting on to this entrepreneur. So I think there's human costs involved when you're talking about network orchestrating companies and the decisions they make, and it'll be interesting to see how they play out.
Okay, and then the other aspect is the money part, even though corporate ventures arm of it. Do you see, the whole concept of network orchestration is a very different animal altogether. That's how I've kind of figured out that, because you have to bulk up. I mean, in network, the power of network, it needs to get to a scale before it can become valuable. Otherwise, it just doesn't work. Which is where, again, the other comment that I think you made was, you tend to dominate. There's the number one player has probably the largest market share, and the number two and the three are much tiny, and then there's no place for the fourth and fifth. That is not the dynamics of in the asset builder industry, where you could have 10 players and all of them could thrive. So from that perspective, and I think a lot of them went for a lot of venture money, and they bulked up. They started trying to get a lot of people onto their platform as quickly as possible. That's a very different DNA, isn't it, to kind of build such a company? Would a traditional organization be successful in balancing their existing models and the new model, the network orchestration model, or do you think they have to cut that somewhere? How do companies manage that? As you're seeing it as an investor, how do companies manage that?
So I think for large corporations, first of all, to shift models overnight is just going to be impossible. So we as we look at this, first of all, the DNA has to change, because everything related to a large corporation, at least from our side, is the concept of asset and technology. What are our assets, what are our technology, what's our IP, we build on it. The second thing is also, compared to the network orchestrator, the way they grow is, as Geetha was saying too, you don't need to hire those people. That's a big controversy. It's like Uber, are they employees, are they contractors? So scale is easy, so you don't have this liability of this large number of workforce that you got. You can scale as the demand goes for it. So for us, as we look for it, we continue to be in that business of assets and IP. So example is, we'll continue to build on the PlayStation platform, and then try out some network orchestration models mapping on top of those assets and technology. Because our opinion is, I don't think it will be completely either this way or that way. The hybrid model may be the best model, because we have there has to be some stickiness. So even though Uber is number one, but there are at least 10 lookalikes coming out. Granted, they're far ahead of the others, but Lyft has got a tremendous lift literally from GM, and that could take off. With GM, putting in their cars, as with Lyft, putting in $500 million. So, whereas when you have an asset, back to I'll just use the PlayStation again, is that's an asset that was going to stay. Now, if we put different models of network orchestration on top of that asset and technology, we have a sustained differentiation against other people.
Okay.
Compared to just building on something where someone can copy for the model pretty fast.
You bring in a very interesting point, so I want to know if you guys agree, disagree. I wish one of you disagree. Otherwise,
no, I have a point of view here in the sense that, just to add to what Austin mentioned, I think the large corporations, they don't venture into it or had not been successful primarily because the fear of failure, right? It's not the lack of innovation. I think, Intel has some great people and there's a lot of innovation that has been happening. But it is just the fear of failure that, to do it on a startup mode, be very agile, nimble, and experiment, because the biggest thing is that you learn when you fail. And that doesn't happen. That culture, that mindset doesn't exist in large corporations. That's kind of the way I look at it.
Okay. How about you?
I also actually had a very interesting point as they were thinking about something. If you take a traditional organization, what it takes to build that is a completely different skill set, like you were talking about. What it is like to blow up overnight, right? There are two different skill sets, but at the same time, think about what it takes to build this. It takes a large capital, marketing muscle, all the avenues that you need. So in a way, we're creating companies that are picked as winners by a few individuals, investors, and press coming together, versus if you took a look at the traditional startup ecosystem, you let the product win, you let the team win, you let the customer speak for themselves. So for me, it's a fascinating thing to think about. Is that the right thing or wrong thing? I don't know. But I think, again, goes back to whether they're creating a stickiness or not.
Right.
They could let the customers be.
But again, are we
judges.
saying that eventually in this battle between the asset creators and the network, I don't think there's a battle, but I'm creating one here.
Right.
Who do you think will win? I mean, please don't tell me everybody has to meet in the middle, but your point of view is that asset creators are strapping on the network orchestration model on the top. And to me, that could also happen on the other side as well. Network orchestrators.
I disagree there.
Okay.
I don't. For the network orchestrators to get a platform and the assets, which took years and a lot of stuff to do, that requires real resources, a lot of time.
Okay.
It's not possible.
So you don't see Uber going and buying a car company, whereas you see the other way around.
I think what GM is doing with Lyft and all, that's a better model than someone just going plain trying to scale. I think they got it right. They did it right because there was a demand for, I hate the way to get into cabs. The guys don't even know how to get to my house. Navigation systems cost $100. But the way Uber did it was, it solves a human problem, and they did a good job. But that doesn't mean some of the people who have the assets can build that same infrastructure on top.
Okay.
Granted, it's a little bit late now, but I think GM and Lyft and all have a good chance.
Okay.
But at the same time, though, I know. So
good to tear that, focus a little more on that to see what other
right, because I have a little bit of. I think I agree with you in the near term. Asset builders are part and parcel of this equation. But think about how roads are today. To me, I think internet will be like that going forward. It's an asset that's a platform that's sort of taken for granted. Right? I mean, cable companies today, even though we still deal with them, at some point these become a background asset that the consumer is not even paying attention to, and network orchestrators / whoever owns the user experience ultimately wins. And even information / data too becomes part of this assets framework. So to me, I do think in the future, quality network orchestrators are the way to go.
Okay.
What
do you think, Ramki?
Yeah, the question is about, how do you define asset here? Right? It's not just a physical asset. It is a platform that you had created on which you're running a business. Right?
Okay.
That's essentially, I would look at it as an asset they have created. That's the USP.
Got it. You're saying the definition of asset itself is shifting to that. Okay. So, but there's a point there, in my opinion, is that it's probably much easier to build the network orchestration model, but much harder to carry the asset, the physical part of it, in the background. But I don't know. I think this is a pendulum swinging this way or that way. So with that, I think I would probably ask some. Are there any questions, comments? Do you guys see the pendulum swinging there? And do you think the asset creators would continue to get their power back, or network orchestrator will take it away? What do you guys think? Any questions or comments? You could just put your hand up and speak. I don't think we need mic in this room. Or maybe there is mic. I don't know. Yes, please.
I have a comment that I'd like the panel to respond to. I view the universe of asset creator and asset orchestration. To me, there's a huge barrier to entry for asset creators. It's a much more difficult space to enter. And so that might explain why we have chosen to become orchestrators, because there's a much lower barrier to entry. And what I see the long-term market is those asset orchestrators eventually need to become holders of assets, or the asset holders eventually take over their market space. And I'd love to hear your comments on that.
Okay. So Austin?
And that's what I talk about. You just take about media, for example, okay? So there's all this content. Let's talk, that's the asset. And then there's Netflix, which is the orchestrator, some form of orchestrator that they were. If you think about how things are going, it's same with Amazon. So there were all the big studios, spending millions of dollars having assets of, various things. And then comes along Netflix, which wants to have its own assets now. So they have to pump in millions of dollars to do what the studios were doing. Now, could the studios have done what Netflix did? They tried. And I think they could have succeeded. There was a thing called Movie Link, which was done. And Netflix came along and disrupted all of them. But if you see that just being orchestrator doesn't work, Netflix is getting into getting the assets, House of Cards, everything else. The same thing with Amazon. And then the asset people need to move fast and try to get into that space.
Or you could also look at it as that problem has already been solved. So let me be more creative, more innovative, and build on top of that, right? So, and I think to his point, network orchestrators at this point are getting into asset building, and asset builders are trying, but at the same time, it's the same classic problem. Established institutions take time to catch up with changes.
So the big question here is, I think, obviously you would want to do everything, right? So because nobody likes being commoditized. So you're seeing pure play network orchestrators trying to get to the asset part like Netflix and everybody, and pure play asset creators trying to become network, get a play or get a hand on that. Who will be successful? I think that's a billion-dollar question. Who will have easier paths to, kind of owning both, to say?
To me, I think it is the first mover advantage, winner takes all, the business model. I think those are the ones that's going to determine,
So you're saying network orchestrator has that? Or, what are you saying? What's your bet on? Do you think network orchestrators will have easier time to gobble up or actually go backwards and own or seize the assets, or the other way around?
So. Given what you're seeing, I would think so.
You think that way. What are some of the reasons? I think it could be a gut feel, but what makes you think that way? That network orchestrators they have an upper hand, or that's the stance you are taking?
It is, again, I think, going back to the gentleman's comment that the barrier for entry to create an asset is much, much more higher than being an orchestrator.
Okay.
That's my point of view.
But then wouldn't that actually go to make argument for the other side? Because if the barrier to entry to create asset is tougher, so the people who have already crossed that would actually be able to cross over to the creating network orchestration model and be successful.
The barrier to entry, that's why you'll get more on the network orchestration side. But on the asset side, people are waking up. That's why a lot of the corporations have venture funds. So if there's this is my thing, if there's a mechanism to get the DNA from the network orchestration, smaller, agile way of picking up some new business models and juxtapose them on the asset companies, the larger corporations, that's the winner. But that takes time. Some people are waking up, just the fact even GE, what GE is doing, or GM is doing, all corporations like us, which are beginning to go out and look at disruptions outside, if we can adopt that faster, the big word is if.
Okay.
I think they have a better chance.
It may be actually industry specific too,
Yeah.
right? For example, if you take media, for network orchestrators like Netflix and HBO to create media is a easier comparatively versus healthcare company, which is trusted, or a financial company which is trusted to come into network orchestration might be easier. So I think you have a case for both sides, depending on the industry.
So, if I may propose, the classic differences, both sides have smart people, both sides have money, both sides have reach, all of that. If there are, and I'm proposing this, and you guys can tear me down. Number one, I think network orchestrators, asset creators, it's very hard to build asset creation. And like you said, there are lots of entry barriers. And if you have done it, you have a DNA that holds you, gives you the strength. On the network orchestration, you are probably over the top type of a player, but you have fantastic agility you bring to the system. Therefore, you kind of mutate much faster. So it's probably a question of your entry barriers tipping over the agility. I don't know which will win because that would determine the type of DNA you would want to have in your organization, right? So would that classically, I think this comes to particularly that.
This is Andy Grove's problem, right?
Sorry?
Inventor's dilemma. So we're talking about that, essentially.
Right.
So I think a couple of big companies do this really well. One is Intuit. They are a big company. They are making money off of their cash cow products, but they also have a great innovation arm. And they've managed to do this, right, really well, sort of incubating products, and then once that's ready, sort of integrate into mainstream. And Cisco does it in a different way. They just gobble up companies that are doing awesome, innovative products.
That's what Austin was referring to.
Right.
So is
acquisitions
is something that they have to look at it as a topmost compared to changing from within? What's your opinion?
From within is always a challenge, but I think getting something from outside to gradually change, and it's time. I think.
But there's also a digestion issue there, right? So not many companies have integrated the acquisition.
Yeah.
In fact, there were some companies who have written down complete valuation, right? So what was it? I think I read that.
No, for us too. Some have worked out, some have not, and,
Right.
and that's the standard thing. But I think more and more people, and that's why I'm there at Sony, is looking at disruptions outside. I spend more time outside than inside, and we need to look at what's going on. We need to look at the future and then try to get it inside to move it. It is slow moving. It's not easy, and it's for all large corporations. Some have it easier, some may not. Intuit, the founder has always been that way, so he continues to do it.
Okay.
But I think that is the model to do, is to inject outside stuff onto good assets and then execute on it.
Okay. What do you guys think? Any other? I see 2, 3. The gentleman in the back, he raised his hand first, so I will come to both of you.
So I have a question.
Yes.
The network orchestration model is really not new. You've had the resellers for the longest time. And basically, they are just another resellers. So this is sign of a little bit bigger problem that the bigger companies are ignoring, which is they have no connection to their customer, which is why they're not able to retain their customers, and somebody can come in as a middleman and snatch it away from them. So they're trying to solve a wrong problem. The problem is, as they go through different channels, their branding is not working. The loyalty of the customer to their brand does not exist. Taxis was easiest because there was no loyalty. It was very easy for somebody to disintermediate because the thing had a problem. Airbnb is able to disintermediate and put you in a house where you don't want to go to stay in Hilton, for example. So that's a problem Hilton should be worried about. And today when I go on the web and I can look at a lower price on something where the feature set in the table looks the same, I have no incentive anymore to buy from a brand necessarily. So I think it seems like it's a problem that the bigger companies have, which they've been ignoring, and then trying to retrofit it and trying to figure it out that maybe somehow this is a new phenomenon. It's not. It's been a phenomenon that's been happening for a long time. It's just now coming and bite them harder.
Okay.
So I'd like to hear your comments.
Okay.
So I'll just take this as a consumer problem. I'll just deal with the consumers. The high-end stuff, they'll still need resellers, system integrators, but that's a different story. But the consumer side, I think more and more as the devices are connected, more and more people tend to be connected with it. So whether it's Apple or Sony, when the reason why we are pushing and investing so much in the network of the PlayStation network is we know those 40 million customers now. They're always connected. So I think there is a mechanism. You can still buy your PlayStation or your other device from Best Buy, but the connectivity
comes through Sony. Okay.
And that's changing. Previously, it went through Best Buy. We didn't even know who the customer was.
Okay, got it.
But I think the mechanism of having every device connected now, whether it's even your coffee maker or anything, GE will be connected with you because of that, for doing.
So you're saying it
so
just
I
gives you
agree
that.
with the gentleman. In the past, it was there, but if it was the reseller issue for the consumer devices, that's changing. From at least the corporate side of it.
Got it.
And there's a flip side to this too. Hi, Paul. So there's not only brands not getting their customers, but we were talking about this actually before. The consumer's attitude towards brands have changed too. I mean, think about millennials, and they are not loyal to a particular brand, or they don't have the same emotional connection to a car that, if you remember back the car commercials of a happy family driving to a Sunday picnic doesn't exist anymore. So I think it's a two-sided problem, and companies are definitely trying to figure out how to fit there.
Interesting. Good point. There's a lady. Yes. The one behind.
I should have given them
I
more
think
time.
one of the challenges for big companies or the asset makers compared to the network companies that are coming in as new entities to a market is that if you're new to a market, you don't have any legacy relationships or responsibilities. So, for example, if you were talking about Uber, they were able to walk into any city and ignore city legislation around taxi plates and everything else. That if you were a taxi company having survived in a city like that for years, it would be very awkward for you as the taxi company to have that disagreement with the legislative arm that is, managing the service you provide. And I think it also happens if you have a big customer as well. Like, the more successful a company is, the more beholden they are to the other players in their value chain and their ecosystem. So they don't have the same agility just because they don't have to own up to anybody at the end of the day. So I think it's easy to be flexible when you're not responsible to other audiences. And I think it's good, and I think that kind of innovation is necessary to break down all those barriers, but I just don't think it's as easy as their added innovation, and I think they have a different set of things that they have to answer to.
Got it.
It's a question. It's a fear of failure of large organizations, and in some cases, it's also cannibalizes their existing business.
That's just a very big concern. How do you deal with that? Is a very big concern.
Because just to take another auto example, because I had lived in Michigan in auto industry. So if you take Tesla, right, battery technology is nothing new, in my opinion. I think there were battery cars even before. What did Tesla do? One is that, and secondly, they completely eliminated the dealer network and the over-the-air update. That's essentially three things that they did. A GM or a Ford could have done it. They cannot do it because they have an existing dealership network that they have created, and it's going to cannibalize their existing business. So it's very difficult for such corporations to change and be nimble and do something different.
Got it. Like to her point on
I'll support the corporates a little bit because to her comment there, I've been on both sides. I was an entrepreneur and I run Sony's. When I was an entrepreneur, I signed an NDA in like 30 seconds, didn't think about it. But when you're in a large company, you have to bother as the baggage it's not a baggage. It's, if anything negative about Sony will be all over the place. Negative about startup company that had a little fire in the battery in the robot that they created.
Nobody cares.
Nobody cares.
Yeah.
So we have to be careful. I know we are trying to be more and more nimble, but we have to carry that because I think the same thing with IP. the startup can do anything, whereas if we were to do something, someone will come and say, oh, they stole our IP. Startups can go steal anything.
It hurts your brand value a lot more.
So the brand value is very, very important, and that's an asset, and that took a long time to build up, and we just can't throw it away by trying to be nimble.
These network orchestrators will be at that point of having to manage everything too, right? I mean, that's part of growth problems.
It looks like they're defying gravity right now. So the last question, this lady has been waiting patiently. Thank you.
So it was more of a comment. The speaker this morning talked about intense customer affinity, and one of the panelists just now talked about, kind of which master are you serving? Are you serving the investors, as the asset creators probably are, or are you really meeting those customer needs and really delighting the customers? And I think the orchestrators have this instant window of opportunity to do that, and maybe then they become encumbered. So I think it's kind of which master are you serving, and I think it's very hard for the asset creators to reinvent themselves and be untethered to the point here about the regulation.
Okay, no, I think what you said is very true. The definition of customer, the intense customer affinity, the morning gentleman who spoke about it hasn't defined who customer is, by the way. So, what are your comments around that? I think this is a very important point as well, right? So,
I do feel like companies, and I think humanity in general, is trying to find themselves at this point in the face of so many choices, not only brands, information. It's like I think our brains are not built to deal with this kind of overload, right? So we're in the process of building it. But think about like Maslow's hierarchy. We're probably at the top dealing with these problems because in my grandparents' generation, buying a fridge was a huge thing. So maybe at that hierarchy, our value system kicks in and helps both companies and probably consumers build this bond. For example, I would buy Patagonia clothes because not only I love their quality, their business practices and stuff like that. So I am making that kind of choice based on what the company is doing and what their value system is and how it matches to my value system. So that's definitely the new definition of brand loyalty.
Okay, so thank you very much. I think we've run out of time, but we still haven't sorted this question of who will kill what and or morph into something new. We will probably settle that discussion a little later once we know whether the unicorns still are unicorns or not. But until then, I think there is one key takeaway, at least if you have to say, that's here to stay. Which big organizations obviously would have to contend with a lot more, think about the brand, think about the scale that they serve in and their entire value chain of resellers and all of that. And that's probably makes it hard for them to move. However, this network orchestration model can be used I think in the first 10, 15 minutes, we did talk about how companies are using it both internally. We didn't spend much time. Actually, you had some, good, interesting ideas of how you could use this network orchestration not as a business model, but rather change your cost structure internally of your organization as well. We spoke about a couple of examples on that. So hopefully that gives you some sense of what you're dealing with here. And we'll continue this track on the next session on the other models that we'll talk about for the disruption. But I'd like to thank the panel here for sparing their time and sharing your experience. And thank you very much.
Thank you.
Thank you, guys.